What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 22nd of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to talk about the current state of the crypto market. I understand we're going through a correction at the moment, and a lot of people are really debating the question of whether or not this is a time to sell and get out of the market, or is this just merely another correction and probably a correction to the euphoria we've seen in the market. As always, I want to try to give as non-biased of a view as possible and really try to calm down the emotions, because when you're investing or trading, no matter how you approach crypto markets, you can't let emotions get to you. We're going to try to keep it concise, to the point, dive in through price action, data science, and really just take a step back at those longer term time frames. All right, so let's go ahead and dive into it, guys. Taking a look over the CoinMarketCap website here, whether you're looking at the last 24 hours or the 7-day difference in price action, Bitcoin is not only down roughly about 12% over the last 7 days, but outside of this, we can see here that there really are a ton of other plays in double-digit red territory, many of which are at the peak end of it, that are some of those layer one protocols that really were leading the market and the rush of liquidity back over the past couple of weeks. All right. So again, we understand here that the market's definitely down some red. And I'll be the first to say here in this case that I didn't expect the correction to go down as much as it has. I was expecting that, accordance to generally support and resistance, we would have wanted to see price hold here on this ascending line of support here that takes into account some pretty, various different significant levels of price action. So we can obviously see we broke down here and we revisit a very big even level, 40K in this case. Now, in the sense of doing the kind of day-to-day technical analysis here in this case, I got to be completely candid with you guys. I don't really know what would be the next place where we want to see support. I know big even levels are very important, but really in the grand scheme of things, I just want to go ahead and share perspective today, all right? In the sense of TA and the chart, there's really only so much you can do within this case. You can have estimations for when you hope for support or you hope for resistance, and everyone's going to see things in different ways. What I want to talk about is something that is undeniable in this case, that is present within the chart. And I think it's really good because sometimes we can forget this so easily, not only during good times, but especially during bad times, right? I want to take a look at a tool here, and we like using it's the date and price range tool here, and talk about not only where we're at right now, but where we've come from just in the past couple months. Now, everyone's in a different position, but many of you here were here back during May through July. And it was a really rough period of time for cryptocurrencies because we had not only come down from the euphoric times around 60, 65K for Bitcoin, where Dogecoin was mooning, Elon Musk had announced that Tesla had bought crypto, right? There was all this positive news in the space, and we entered into the first major correction of the market. And it dragged us down to a pretty brutal price range around $30,000. Now, I want to ask you guys a quick question. For those of you who were around during then, when we were down at the $30,000, $29,000 range, what were people telling you was going to happen? Were they telling you the prices were going to rally up, or were they telling you that prices were going to go down? The overwhelming majority, I would say easily 75-80% of the vocal market that was telling their opinion of the state of the market was saying that we were going down to some various different figures. We were going to go down to $25,000 Bitcoin. We were going to go to 20K Bitcoin. In fact, we might even break down below the previous all-time highs of 2017 at 20K. We would go to 15K, whatever it might be. Right? A lot of people had some very confident bearish takes. And this was after multiple retests of this general support range around 30,000, a big even level. Now that's one thing to consider in mind in this case. But outside of that as well, we can see here that from this time range, right, back here during the kind of bottom of the correction or this general support range, in a matter of 64, I mixed up my metrics here. In a matter of 49 days, we saw an over 77 to 78% move in Bitcoin's price. From that same range that people were talking about Bitcoin going to 25K, 20K. It's time to sell, wait for the dip, right? That's what everyone was saying. Well, it didn't happen. And along with that as well, we got a 77.8% move in the market if you just would have held on and remained patient. Now, considering even the two brutal sell days that we've really had here, which was on September 7th of 2021, 11% down move, and here on September 20th of 2021, a nearly 9% down move, we can see this has definitely been a noticeable correction here, right? But a 24, 25% pullback in total for price, right? You can see this is definitely noticeable. at the same time, from the bottom here to where we are here today, we're up 42% in price. On track to being 50% better than where we were back in July of 2021. Now, why do I point this out, right? Doesn't this just seem like overt exuberance or perma bull kind of mentality? And it's really not. It's just a showcase here that we've come a long way from a period of time where people were very confident we were going to go to 25, 20,000. And when you take a step back, even though we didn't hold on this support line here, I'll be the first to say in that case, it's not definitely a good sign to see in this case. Take a look at the logarithmic chart. It's not all terrible when you look at it this way. And you can start to see here again that perspective that we were able to really turn this 30K range into support. Perhaps we're going to do the same here for 40,000. Who knows? I don't want to be here to tell you guys exactly what's going to happen, right? But this is pretty common in this case. We've had dips of this magnitude in markets. You got one back here in August of 2020. You've got the 2-week period here, right? From around 38K down here to 28K. Just in the last cycle. Now, I want to go ahead and actually talk about something. Again, this is something, and we got to train our brains. We got to rehearse over some things that you guys might have heard once or twice or too many times to count because I like to ramble here on the channel. But this is a very, very important thing that I still think a ton of people miss. I wouldn't be talking about it unless I think people needed to hear this now. Let's take a look here at BLX. The long-term chart analysis here, we see the expanding cycles over time. You know, what's really great about expanding cycles and long-term cycle analysis is it can tell us the general patterns that cycles go through in this case. We can see here that in the first cycle, right, price generally held around this, not only the parabolic line here, but we can see here that from bottom to top, we have this nice time frame analysis using that same date and price range tool you can find here on the sidebar of TradingView. And within that time frame, really the parabolic second half of the cycle, you can see this line here in the middle. I'll zoom in so you guys can see this very well. You can see there's a line across that's horizontal, one that's vertical. Notice how price doesn't really cross the horizontal line until the last half or the last 3/4 of the cycle, or the last quarter in this case, right? You'll see that in practically all cycles. We see that we don't cross this until we're past the halfway line in the second cycle, which was even more of an over-exuberant one where price started to climb and have parabolic price action early on, going from around $14, $15 per Bitcoin up to $326. Let's take a look here during the third cycle in this case, right? Probably one of the clearest definitive examples of this rule, right? A nice, smooth, euphoric build up into 2017 and going into the winter, in this case, January 2018, right? Last quarter of the cycle. Let's take a look at this one. Well, we're expecting that we're going to have a 47-month cycle in this case, comparative to the previous ones, with the expanding cycle theory of anywhere around 11 to 13 months added from the previous one. What's different about this one? Let's take a moment to look at it, see if you see any difference. I don't know about you guys, but and again, I know some people argue that we don't want to use expanding cycles. That's perfectly fine. That's to each their own. But if we're going off of history in this case, I don't know about you guys, but it looks like we crossed the midpoint line earlier than any other cycle in history. In fact, we were almost on our way to doing that way back here in June of 2019, escaping the bottom of the bear market. This was one of the fastest recoveries for Bitcoin in history, especially when we consider decaying multiples, in this case on returns, and we also consider the expanding time frames, right? An incredibly fast recovery from the bear market here. And also, we haven't received or seen price get to this midpoint line, right? Midway through the cycle like this before in history. There's no record of it. So what does this tell us about the market? We're getting more exacerbated rallies, even as this is a growing asset class. That's an interesting phenomenon. But we're also seeing some pretty brutal corrections that don't come around as often. But when they do, they hit hard. Well, it's the same culprit that we've talked about a lot on this channel. And as much as it will benefit prices going up, it will also drag prices down heavier in this case. And that's the excessive amount of leverage and credit in the market. Now, I don't want to badger on about this. You guys have heard me ramble and rave about it. I'll give you the quick pitch for those who don't know. Stay away from derivatives platforms. Do not trade on exchanges that offer you leverage, or at least just don't mess with leverage. Doesn't matter if you want to trade on the exchanges. I would just say take your money where it counts and go away from those exchanges if you have the opportunity and can still trade the cryptos you want. But the bottom line here, guys, is that liquidity on the actual spot markets, the exchanges like Coinbase, the actual spot trading on Binance, on Kraken, the problem is right now that liquidity is very thin. And because of that, when someone comes in and buys up 500 Bitcoin or 1,000 Bitcoin, prices really start to tick up. And the same goes for the downside. Right? And again, we can actually take a look at that here if we dive into the shorter term time frames. Let's take a look at the hourly chart. You guys notice here, if we actually look at Bitstamp or any other exchanges here, we can see that there's really not much Bitcoin being sold. That's really dragging down prices, right? And for example, in this candle, 634 Bitcoin being traded. Now, of course, this is just on Bitstamp, so it's in the grand scheme of the market, a couple thousand Bitcoin. But a fraction of what it used to take in this case to make this type of move in the market, where we really see a near 10% decline here within a matter of just a couple hours, right? And we can see here as well, this is actually a much better example, right? Basically the domino effect of liquidations where people are getting knocked out of their positions, and really only a couple of Bitcoin can come in and drag the price down on the order book due to liquidations where people who are borrowing on credit, their underlying collateral gets sold to cover the depositor who lent them their credit in the first place, or their money to go out and buy more crypto. This has caused a dynamic where on the upside, where people can borrow credit to push prices higher, buy more crypto, sets more demand, drives prices higher, and then vice versa. When enough people sell in this case, when there's some outflows in the market, it starts to liquidate those users and it starts rolling it back. So as we talked about, leverage is a tool to be used if you know how to use it properly. And unfortunately, a space that claims to hate banks and want a new financial revolution where the people take out control and we have sound money has unfortunately not been the case. And it hasn't been, guys. We have to be honest. This is the dynamic that's changing things. And it's probably going to exist for a little while, but I think regulators are going to clamp down on it a little bit over the coming years. Whether that's good or bad, I'll let that be your decision, but it's just the reality, the nature. It's disoriented crypto markets quite heavily. But again, I want to step back to that first point we brought up earlier, and we'll dive into the data science. For just perspective's sake, really in a matter of 64 trading days, we're up 40% from that bottom point. That point again where people thought we were going to go down to 25K, 20K, you name it. I would say that's a pretty damn good return. It's a pretty good return. Pardon my language, but sometimes you need to use language to exacerbate a point in this case. And I think that we've done a great job of recovering in this market. And yeah, I would say that a 70% move in 40 days, right? Pushing close to 80% in 40 days, which would be almost 2% each day. On average, yeah, I would say that was a pretty good rally. And I think it happened a little too quick, especially after a whole 50% correction. So I think what we're going to do more likely, and again, don't take my lines at face value, what I think we're going to see here is a slow recovery towards the end of the year. And that's even a little bit optimistic here. Our target is for, again, as we've talked about on the channel, revisiting back to those all-time highs towards the end of this year and really kicking off the continuation in 2022. When you consider a lot of different things such as tax reporting, all types of different factors, there's a good reason why a lot of bull markets and bear markets can begin and end, in this case, during starts of new years, right? So just important things to keep in mind. Now, let's go ahead and take a look at some data science models. And there's a couple that I want to dive into, you guys, with the R-HODL ratio, right? One of the accurate ones alongside some of the other key data science models that have showcased us discount opportunities when we have bottoms on bear markets. Does a great job of that, right? We enter the green zone here, and also when we're in exacerbated price territory, right? We go into this red shaded zone. Now, when I look at this chart, guys, I don't see any major disorientation from the trend here, right? Here on September 21st, September 10th, right? Roughly around the same range we were at back here in February of 2021. So this is showing some really good confidence here. We're not seeing a major amount of people exiting the market. looks pretty good. In fact, it looks very similar here to the build up back here in 2013 from April to October, where we eventually got the continuation of the cycle. I'm not saying that we're going to get this kind of crazy parabolic run up so soon, but I will say again, the pattern is very similar here, which is really interesting. And I mean, whether or not you want to talk about like smaller deviations, we're still holding up here right around the same range we're at back here in July and September of 2017, midway through the cycle in 2017. Right? Same goes here, right? Back here in the 2011 cycle. Let's take a look though at another thing here, which is the HODL waves. So the HODL waves, this one in this case is a more simplified version of the data science model. This is showcasing us, and I'll make sure you guys can see the actual core chart here on lookintobitcoin.com. You can see that this measures the percentage of Bitcoin unspent transaction outputs, or the amount of Bitcoin in total from the supply that has not been moved in over a year. And generally speaking, this generally sets in higher lows or higher highs. It has a general slow but steady uptrend over time, where there's a certain percentage of the Bitcoin supply that for over a year or more has not moved. Now, this has started to decline during September to where we are here at where we are standing in the sense of like going through the summer and here in the fall. Now, a lot of people say that's a bad thing, right? Well, actually, it's not. That decline is actually good because you have some people who accumulate at the bottom starting to sell. That always happens in a bull market as new investors come in, right? We can see that the decline is matching with the price action here. Decline, increase in price. Decline, increase in price. This is status quo kind of price activity according to the data science model. What's interesting though is that we actually want to be fearful if this starts to rise. We can see here that the more this starts to rise, it starts to flatline initially, it starts to rise. That's actually a great confirmation sign that bear markets are going to persist for some time. But we haven't really seen that increase yet. We've been going sideways. One thing I'd say to be wary of is not to be worried of, oh my gosh, the next step is going to be an increase. It might be that we're in a 2013 scenario, as we talked about before. All right. So this is something, again, just to bear in mind that we haven't gotten any major rise or confirmation in the data science model. All right. We're not seeing a ton of people in this case starting to mass accumulate like they do. And well, actually, the one important thing to keep in mind with this data science model is that there's really technically a delay over time. Because in order for this metric to increase, Bitcoin needs to be held for over a year. And what we see here is that during these peaks, right, in the market, as we start to cool down in price, people are starting to accumulate. And again, that starts to really follow through a year after and stuff as people buy during these 60, 80% corrections in price, right? So again, long story short, put it simple, the data science model isn't flashing anything big. And one of our custom indexes here, or our custom indices that we have, is the Bitcoin Flow Index, right? And this is a simplified aggregate index. Some of our favorite data science models that we cover here on the Dash report for the Data Dash channel, right? And we can see here that overall, we have not gotten to the exacerbated territory that we usually see, which is upper double-digit territory, usually around 16, 17, 18. Above that is where you usually want to call it quits, right? We didn't reach that back in May, and we certainly haven't reached it here. Things aren't overextended yet, guys. Not according to the data science models, not according here to price. I can tell you guys for sure we haven't seen a rebound like this in price as close to the previous all-time highs where we entered into a bear market following it, right? And just take a look here, right, back at 2017, right? Nowhere near, in this case, in the sense of time frame, right? This was a short-term rebound. We didn't wait multiple months and then have a complete vertical rebound back up close to the highs at 16K and then drag down, right? We haven't seen anything like that before. So what this is likely, again, as we've talked about, is the market starting to capitulate due to liquidations, right? The market is, in this case, facing excess sell-side pressure because it had seen excess buy-side pressure from people who really didn't own that money in the first place. That's what it is. So, again, guys, in the sense of like TA analysis, I don't think there's really a need to do much now. I think one thing that I'd like to see is that this 40K level holds, that hopefully we've seen the worst of it, that we hold around this range and start to trend back up. But again, this plays into one thing that I think a lot of people still haven't built, which is expectations. and that is that we're likely going, right, to want to build support here and slowly but steadily move towards the end of the year towards retesting those all-time highs, right? I don't know how it's going to look, guys. I don't think anyone really knows, but it's a general thesis of understanding broad time frames so we can set our estimations and also keeping the broader picture in mind. All right, guys. I've rambled on enough. If you like this kind of long-term analysis, though, if you guys really are like eating it up and you've stuck around this long in the video, the reason why I talk about it here is it just kind of makes sense if you guys are this far in the video. We have the Dash report you guys can check out. We got a great community, thousands of different readers who've been participating. So if you guys are interested in joining in that community, then please feel free to. You guys will get access to a monthly report that we put out. We're going to start doing, as of next month, and we've already been doing them in this case, these webinars, but we're going to start doing mid-month webinars where you guys will get access to where things are going in the between the newsletters, where I'm thinking the market's heading. And outside of that as well, the discussion group, you have access to my percentage portfolio tool for crypto assets. There's a ton of great things you guys can get with the Dash report. But I digress now, guys. Thank you all so much for watching. If you enjoyed this video, consider dropping a like, consider subscribing, and hitting the bell icon. Those are the best ways you guys can support the channel. But that being said, everyone, I'll see you all in the next video. Stay safe, trade smart, and don't let emotions get the best of you. I promise, if I'm to give any financial advice, even though I'm not a financial advisor, not letting emotions get to you is probably the best thing you can do. So, anyways, guys, have a wonderful rest of your day, and I'll see you all in the next one. Take care, everyone.